All right, everybody. Well, hey, our first speaker here on day 2 is somebody who we recommend out a ton, and she is awesome. One of the things I get from our students and people are like, hey, we start buying notes. You got to start figuring these books out. We got to start figuring out what the heck am I doing to make sure I'm putting enough away or doing the right thing so Uncle Sam doesn't get mad at me or those 3-letter words IRS doesn't show up or stuff like that. But we're really excited, and it's even more awesome when you're working with somebody who's also an investor and has investor mindset versus somebody who's just a bookkeeper. So we're really honored to have Debbie Mullins from Debbie Mullins Bookkeeping join us here as a first-time Note Camp speaker. We've been trying to get her on, and schedules didn't work or things like that. So known her for years and just jacked up to have her join us here today on Note Camp. And you guys are going to want to grab a pen and paper. She's gonna give you some great insight and some things. And Debbie, we're glad to have you. How are you doing today?
Hi, I am good today, and I'm excited to be here. So thank you for having me.
No problem. Now, you've got a presentation you want to go through a few things with folks, slides there. So cool. I'll let you share the screen. And then, do you want to take questions at the end or throughout? What would you prefer?
Maybe a little of both. I have about 10 slides, and I think we have 45 minutes.
Oh, you got longer than that. You've got 75 minutes, so we'll probably leave it to have plenty of questions at the end there.
Okay, yeah, absolutely. Then that would be good. So maybe we do get through just the general information, and then we can do questions. So
perfect. Yeah, that'll be awesome. We'll leave it up for because I guarantee we had plenty of folks. I need a bookkeeper. I need somebody helping my books. I was like, okay, great. We got just the gal for you.
Awesome. All right, so I'm going to share my screen.
I'm going to quiet my video here, but I'll be lurking here for you and listening in and fielding questions for you, okay?
If I can manage to click on the right button. There we go. Do you see my grandkids?
We see 2 kids, yeah.
Okay. Usually my screen gets outlined, and that's not outlined. So, okay. Awesome. All right, well, we will get started. And let me get that chat window up just in case. I do have 2 screens, so if I'm looking back and forth, I obviously am not seeing the video.
Yeah, no problem. We see your smiling face and your contact information, and it's nice to meet you. Is that the one? Right.
Awesome. All right, so yes. Hi, everybody. We're going to talk about bookkeeping today, and this is my contact information. My email is, and my website is dmbookkeeping.net. I do technically have the Colton Group LLC as my official name, and that comes from my 2 grandkids, which is Cole and Tenley. So I am Colton Group. I do bookkeeping for my clients they sign an annual agreement with me. I'll do a monthly or quarterly, but I do also teach others who want to do their own bookkeeping, and I really do enjoy that and helping. I'm a huge animal lover and advocate, and I am a Texas realtor, and I am an investor, mostly a passive investor. But I've worked with investors for years now doing bookkeeping and everything from multifamily, flips, rentals, notes, contract for deeds, everything that you guys do. So I'm glad you're here. All right. Okay, so I'm wrong. We don't have just 45 minutes. And obviously today I can't teach you everything you need to know about bookkeeping. But I do hope that I motivate you, that you will think about getting your books done, not an Excel spreadsheet. I want to get to where you really understand your numbers and how your money works. And you need to understand the profit and loss and the balance sheet for your business. And you just don't know what you don't know. So that's what we always say out here in the investing world. And when you're doing your books, things can certainly look correct and you're entering something and you think it's, yeah, that makes sense. but really it probably has to dig a little deeper and do maybe even some different coding. All right, so bookkeeping is running your business, and running a business takes time. And if you are investing and you have set up or going to set up any type of entity, you are going to be running a business. You're not investing, you're running a business. And so you really want to keep that focus, because what happens is you really start thinking about it just on a personal level, because you're investing, but you're running a business. And so you want to get set up from day one, doing it correctly. If you didn't do it from day one, it's never too late, right? So everything you do, I want you to say, would Home Depot do it? Would Microsoft do it? Okay, how would you run your investing business? For bookkeeping, you're going to need a separate set of books for every entity, every LLC, every S Corp, whatever you set up, you need a separate set of books. You cannot combine them. And I understand you have someone later who's going to talk about setting up entities and what you need. But everything correlates to bookkeeping, right? Because that's what you have to track all these entities. And what I find is that we set up entities and we don't know why. We set up too many entities, and then we can't keep track. We don't even know why they're set up. We don't know how to utilize them. Why would I be a single member versus an S Corp? And how does that relate to bookkeeping? It's not different. You're going to do your bookkeeping regardless of your entity type, right? You do the setup for different tax breaks. And typically starting out as an LLC is awesome. When you get to making a certain amount of money, that's when you want to start thinking about an S Corp for tax purposes and tax breaks and tax benefits. But just don't complicate your world from the beginning, because I see that over and over and over again. You have these grand plans, but just keep it easy until you slowly build up. I see people start moving assets from one entity to another, like down the road. They decide they want to start, I'm going to track all my rentals over here. I'm going to track my notes over here. And they start moving assets around. And you really cannot do that, because you are selling that asset from one entity to another. You could be creating gains in one entity. So just really think about your structure and don't overcomplicate it. And in general, we do not commingle. You never, ever transfer money directly from one entity to the other. Now, possibly in a loan situation where you're truly giving a loan and paying interest, but you do not transfer from one entity to another. And the thing I see all the time is that somebody sets up their first LLC and then they want to open another one, and they pay that $300 or whatever it costs to set up their LLC out of their first LLC. And you would never, ever do that. You use your personal money, just like you used your personal money to set up the first LLC, because what you just created was a due to, due from. Now company number 2 owes company number 1 money. So never, ever commingle. Just think of them as this entity lives over here in Hawaii and this entity lives over here in Florida. And then I also see people close their entities too soon. They think they're done, but you've got transactions and things that come in down the line. You still have bills that might need to be paid. So just keep that in mind if you do close your entities. Okay, so tracking your entities and treating each one like a separate company is very important. All right, and then you have to have banking accounts. And there's having too many and there's having too few. And some people have too many when they try to have a different bank account for each asset, or they try to have a bank account for each JV partner. And the reason they do that is to try to track funds. But if you're doing bookkeeping, then you wouldn't need those because it's all in your books and you can easily track it that way, right? But too many or too few. So at least have a checking account, of course. You'd have to have one. You've got to have the entity name on the statements, not a personal account. This is kind of optional, but sometimes good to have a savings account. You might even need an escrow type account if you need to save to pay for things down the road. Again, your entity name on the statements. If you're doing rentals, you should certainly have a trust account where you keep and hold security deposits in a separate account. And then a company credit card. So again, a credit card with the business name on the statements. Credit cards are awesome in any business, especially when it comes down to an individual who's running their own for many reasons. You have great fraud security. They pick up on things that are fraudulent. But most important is you do not have to send a 1099 to anyone that you paid on a credit card. And because we're silenced, I probably can't hear the oohs and ahs, but that's a big one. The credit card companies, they report to the government all of those transactions. So you don't have to.
So you're saying if you're paying somebody, so literally, this is an big aha nugget.
I know, and I can't hear people. I'm like, I know that's a big aha moment.
So you're saying if you're paying somebody with a credit card for their work, their time, or stuff like that, so you don't send them a 1099 at the end of the year then?
Not at all. Yeah, absolutely.
That opens up a whole variety of different things.
Yes. Yeah, that is, I mean, who cares about what you're doing with that credit card? That is the biggest benefit right there. Because, people don't understand W-9s. They don't understand 1099s. They don't send them. They don't know how to send them. It's time consuming. So if you can use that credit card for everything, do it. Obviously.
Points and all that other good stuff too for you. Yeah. Wow. But you got to use the right credit card for the right entity though, too, on that.
Yes, please. Okay, so now I see the chat. I see the wows. Drop the mic. Wow. Yeah. It is. And people don't even realize that when you send a 1099 to somebody, you're also sending a copy to the IRS. That's what you're doing. You're telling the IRS that this person just made some money and they need to pay taxes on it, right? And so they think of sending a 1099 is just reporting it to that person, but you're reporting it to the IRS at the same time. So, yeah. So that was worthwhile. That makes the whole session worthwhile, right? All right.
Yep, we're all done. We're going home now. That was great.
That's all you need to know.
Yeah. Now, John asked a question. Does it need to be a business credit card?
Yes. It must have the statement name or the business name on your statement.
We're not talking a debit card. We're talking a true credit card. That right. Too? Okay.
Yeah. Because if you have a debit card for your bank account, it's going to have the company name on it. Because it's a business account, your debit card would also have your business name on it. It's that statement though. When you get that statement from the bank, the credit card, a vendor, anybody in your business, nothing should have your personal name on it. It should always have your entity name. Now, if you're doing everything just as an individual with your social security number, of course, it's all personal. But running a business and having an entity, then everything has to have the name of the business on it. Mm-hmm. And we know why, right? That's commingling. It's breaking that veil of your company, and you've immediately opened yourself up to personal commingling.
Mm-hmm. So we're talking about two, because David asked a question. Well, my statements have both my name and personal name.
Yes.
If you want to answer that.
That's okay. Because as we talk a little bit about W-9s, if you fill out a W-9 and you have an LLC, on the very first line of that W-9, you're putting your personal name because that's the name on your tax return. And so the bank pretty much knows this, right? Because the bank makes you give them your company documents. And so the bank knows that if you're an LLC, then they're probably going to put your name on there as well. But if you are an S corporation or things like that, you there's probably no need to have your personal name on there. But as long as the business name's on there, because it could be a mailing address, you know, it could be in care of Debbie Mullins at this address, as long as your business name is on there.
Huge. Question here from Todd. He goes, in transferring money between LLC entities, is it different between a single member and other types of LLCs?
Not at all. You can never transfer money from one entity to another. So what you do is you take money out of one entity into your personal account, and that's now an owner draw. And then you deposit money into the second entity, and that's an owner contribution. If you transfer money from one company to another, it's now a due to or due from. That company owes, company B owes company A that money back. Make sense?
Makes sense.
What if the Cash App is in your entity name? I'm not sure what that means.
So basically, is it the same thing if you send via a Cash App like Zello? If you send money via Zello out to somebody, you pay a vendor.
Oh, we're going to talk about that in a minute.
Okay, cool.
You see my slide? No PayPal, no Venmo. Is that what you're talking about?
Yeah, that's what she's talking about. Yeah, exactly.
Okay, so repeat that statement. Okay, if you have 2 LLCs, 3, 4 S Corps, corporations, I don't care what it is. You cannot transfer money directly from one to another, because what that creates is a due to, due from. That company that you just transferred money to now owes the first company. Okay, they are not related. That would be like you putting money into my LLC. Okay, they're not related. So the money has to come out of the first LLC into your personal account, from your personal account into the second LLC. Okay, it's an owner draw from one and an owner contribution to the other. And I see it all the time. Direct transfers. Okay, these aren't bank accounts. It's not a bank account. It's like, oh, I have money here, but I need money over here. It's not a bank account. It's a business. How do I undo that? You transfer the money back. And if you don't have the money in the second LLC, then you need to do an owner contribution into that second company. So that company has money, and that second company needs to pay it back to the first one.
Todd asked a question, is transferring to a DBA from an LLC similar to transferring to a personal account?
Transferring to a DBA from an LLC.
So it'd be like if Todd, if you're doing Todd Silverstein doing business as Silverstein, you know, if you don't have an LLC set up for it, that's like transferring to your personal account.
Mm-hmm. Yeah, if you're saying you're a sole proprietor transferring to an LLC, or okay, so let's talk about an LLC. You think that it's a disregarded entity. I hear that all the time from my clients, because they mix their personal money with it and they do all kinds of things. Oh, that's okay, it's a disregarded entity. You need to forget about those words. It is an LLC, it's a standalone entity, and you set it up for protection from your personal assets. So don't think about it as being okay to do anything personal with it, right? So, forgot where I was going with that.
So basically, you know, one of the great things is it says the company is not me, I am not the company.
Yeah, exactly. So you're still transferring from your personal account into your business account, right? Or your business account to your personal account. So we're talking about disregarded entities, sorry. Disregarded just means for tax filing purposes. An LLC does not file a tax return. So that's why it is disregarded. But disregarded doesn't mean it's a disregarded entity, like it doesn't matter, right? It's an LLC, and the bottom dollar of your LLC at the end of the year, your net income, it rolls onto your personal return. Okay, so don't use that word disregarded entity ever in your life. Fix and flips. I'm like, oh, should I structure that under one company? Yeah, so I see people, we're talking about the question about fix and flips, buy and holds, should they be under the same LLC? So this is where I'm kind of saying people sometimes set up way too many entities. You can have a variety of investing options and different investments in the same LLC. An LLC is investing. You have to have a type. What is this LLC? It's investing. So it doesn't really matter if you're flipping or rentals or notes. Now, it might get to a certain point where you don't want to have too many in one, just because of the lawsuits and the potential, money that's in there. But you don't have to separate them out.
Well, one of the things that Montrese is also doing, he's doing some fix and flips in one entity and holding assets in there. He's also got notes separately with not only his money but other people's money on partnerships, stuff like that. So I think it is good to keep your partner deals separate from your individual deals personally, because he's running different things through that.
But it's separate in your books,
right?
My question would be, are you using a formal bookkeeping program like QuickBooks? Because I do a section in my assets. Here's my flips, here's my notes, here are my JV partners, here are my long-term liabilities, right? So it doesn't matter that they're all in one company or one set of books. Fix and flips. I have an SD checkbook LLC. Should I get rid of that and put it in a regular SD ref IRA? I think that's the IRA question is a good CPA type question. You have benefits in doing things different ways. So I'm going to divert that to a CPA.
Yeah, David, that might be a better question for James Jones, who's a self-directed IRA expert, talking on Sunday out there.
So you said when you talked to your CPA about how do I get money in the LLC and out, and he said, just move the money there from my personal account. Yes, absolutely. That's exactly what I'm saying. If you have an entity, you personally put money into it. That's an owner contribution, but you would not put money into it directly from another LLC. So that's absolutely bookkeeping related. That's correct. Yes, so asset protection, if that is, it says it matters for asset protection. If that is talking about how many things right. to put into one, that's why you'd want to limit that. But I have investors who have 70 rentals in one set of books. So yeah, there's some risk there, but it's still your business. And if you're running your business correctly, hopefully you don't have, you're not into too many lawsuits. However, with rentals, it's bound to happen at some point. I have investors who have been sued many times and they always win because they're doing things fine and legitimately, and it's just some disgruntled tenant. Can you loan money from one entity to another? Absolutely. You need to have an agreement typed up and you have an amortization chart, and that company should pay the other company principal and interest back. Doesn't have to be monthly, doesn't have to be weekly. It could be every 6 months. It could be once a year, whatever the agreement is. But you cannot loan money from one to another without there being interest attached. And the IRS wants to see usually a minimum of 3%. I am in California and people sue for everything. Yeah. And investors, you're opening yourself up, right? You're gonna, like I said, if you have, especially if you have rentals, if you haven't been sued, at some point, you're probably going to be sued. So, but again, my investors, I haven't seen any of them lose yet, which is a good thing. Okay. I love it. You guys are already thinking.
They're thinking. We've got some, yeah, exactly. You're not gonna have a lack of questions on this round, I'll tell you that.
Awesome. Okay, so on my screen, pay and receive money like a boss. Do it like a business. Not PayPal and not Venmo. Now, if you use those, you absolutely can. Everybody does. but you want to have everything in your books. And even Venmo and some of those other places, they're starting to set up a business portal. And I just said that, right? They're starting to set up business portals, which means in the past, they were not for business. They were for paying your brother-in-law back for the dinner, or they were, they were personal accounts, right? Zelle, all of those kind of things. So they're third party. They're not your business checking account. They're not a business to business transaction. And even once they have a business portal, you should still have everything in your books, because I'll be doing books and I'll have all this PayPal stuff in there, and I need the detail because I need to know how to code it. And they're like, well, if I ever need that, I can log into PayPal and look it up. Well, then why do you need books? Right? Everything should be in your books. It shouldn't be over here and it shouldn't be over here. It should all be in your books. So you should use business checks. ACH is a business to business transaction that you do in your bank account. Deluxe checks online, people use these, which is kind of awesome. It looks just like a business check, except you can email it to somebody and they can see it on their screen. They can still take a camera photo and deposit it, but it looks exactly like a business check. It just gets emailed. We talked about company credit cards. That's always the best way to go. Of course, you can wire money, but that's, those are for large transactions and there's fees associated to it. Your bank will also have a fee for an ACH. So you would want to check with your bank. Sometimes it's $3 per transaction, which is ridiculous. But if it's 30 or 40 cents, that's just like sending a stamp, right? To have that done. When I worked with a commercial bank, we did it. It was 19 cents per transaction. So definitely, check with your bank on those options. And then an ACH also means that you have to have your vendor's routing number and account number to send them money. But it is instant. And so everybody's like that. Oh, I want to pay. I want to get them their money. I want to pay them Venmo. I want to pay them fast. Would Home Depot worry about paying you fast? Would Microsoft worry about paying you fast? No, they have a process. Who's my vendor? Do I have a W-9? And then I make a business payment to them. Okay. You control it. And no one gets paid unless you have a W-9. That's a big one. And we'll talk about it a little bit more. Okay, here's your first quiz. I'm reading a couple of comments. While you're thinking about this question, is it advisable to create an LLC for every property you purchase, especially for rentals? No.
No.
No, I would not. You will drive yourself crazy. And your CPA is going to charge you for every Schedule C that he has to create. Just causes lots of work and extra money. I'll have people who do 5 or 10 rentals in one. Like I said, I've got somebody who has a ton of them. Some people do 3 or 4. But I think 5 or 10 is there's nothing wrong with having 5 or 10 properties in one LLC. Again, just run your business legitimately.
Yeah, I mean, that's what I say is, if it's a huge commercial property, you probably want to keep that separately. If it's you got $1 million in assets and rentals. Yeah. So if that's 5 rentals, then that's one LLC for those 5. It's
yes.
not one for every rental property. I don't have an LLC for every note I buy. Yeah. It would drive you bonkers and bookkeeping and fee. No. So, it all depends on where you're at too. If you got one rental and that's all you have, that's all you're going to have. It's a different story in a lot of cases. So
yeah, exactly. And I do have a client who has like 3 really large commercial buildings. And yeah, every time before he buys it, he sets up a new LLC just for that commercial building. But they're $4 or $5 million buildings. So yeah, they should have their own LLC or S corp or whatever it ends up being. And every time I say LLC, guys, it could be any kind of entity, but that's just kind of my slang word for an entity. So, all right. So when you're filling out in your books, filling out your payment, it's not always a check, but this is what it looks like in QuickBooks. So it's really easy to fill out. What is the most important field you are going to complete? Name, the coding, the memo, the class over here. If you can see the class, that's where we just tag it by every property. So what do you think? Name, memo. This is where it's coded over here. The account is where it's coded, the date. And just so you can see that you're paying me $1,500,000 also on this check. That's super important. I like that. No guesses. Nobody wants to put it out there. What's the most important field?
Ravel says amount.
On this one, the amount was most important to me.
Blaine says the account. Edna says the memo. Donald says the memo. Let's see here. Allison says the coding. So we got a few different folks coming at different things here. Your entity name on it, Linda says. RJ says the account. Good guesses.
Good guesses. Okay, very good. So the most important field on this check is the name. Pay to the order of. And why is that? Because if you don't have a W-9 from someone, you don't know who you're paying. Are you paying Debbie Mullins? Are you paying the Colton Group? Are they a legitimate company? Do I have them set up in my system? You can't pay someone unless you know who they are. The name. And when you're not doing formal books or you're doing a spreadsheet, then you don't think about it, right? Because you're not, you're not filling in the blank. And of course, everything on this is important. The date has to match your bank account. The memo is very important because historically you are not going to remember what happened in 3 years. So you've got to have that memo. We have to code it correctly, all of those great things, right? But you have to know who you're paying. And this is the number one mistake I see in small business alone and in the investing world, is that we're skipping the step of running a business. Second quiz, is a W-9 a 1099? Clearly it is not.
No.
They have two separate names. So you always, always, always need a W-9 from any vendor that you pay. It doesn't matter if you pay them with a credit card. It does not matter if you pay them less than $600 a year. It doesn't matter. There's no reason that you would not need a W-9 from someone. I had a client who was arguing with me one year in January because we needed to send out his 1099s and I didn't have W-9s from people. And well, you don't need them if I didn't pay less than 600 and you don't need it for this and you don't need it for that. And I'm like, I need it in your books because for one thing, you need to have the name filled out in every field. If I don't have the name filled out in every field, I can't run 1099s. If I have a blank name, then there's a chance that a 1099 somewhere is going to be wrong. Because my system pulls by the name, right? I'm going to get a total of what do I put on that 1099. And he said, my CPA said, I do not need a W-9 if I paid them less than $600. That is wrong. And I said, well, I think you need a new CPA. Because the IRS requires you to prove that you are working with legitimate businesses, right? It can't be money laundering. I can't just write these random checks to these random companies when really it's me and I'm just paying myself, but I want it to look like it's an expense in this company. Okay. If you have a W-9 for everyone you've paid, then you have proven that you are working with legitimate companies. Okay. Now we use a W-9 to determine if we need to send a 1099. So you don't even know if you need to send a 1099 if you don't have a W-9. Okay. You cannot send a 1099 unless you have a W-9 because you don't have the information you need. Okay, we're letting all this sink in. Let me see. You mean I need a W-9 if someone is working for me? If someone is working for you as an employee, no. But if I pay a vendor for their product, like a computer, yes and no on a computer. If you buy a computer from Best Buy and you walk into Best Buy and buy a computer, you're not going to get a W-9. Okay, so there are a few exceptions. If you walk into Home Depot and buy things for your rental property, you are not going to get a W-9. But I will tell you that if Best Buy was sending their people over to Home Depot to buy products, Best Buy would have a W-9 from Home Depot because they would have a business account and they would have asked for one. They would have set it up on a corporate level, right? So they do have them. But as you know, as a consumer technically walking in, you're not going to get a W-9 from those people. Okay. But if you buy a computer from John Smith's Electronics on the corner, you should probably get a W-9 from them because just because they have a building, they're probably an LLC. Okay. So there is a fine line that you have to kind of think through a little, I don't want to say common sense, but some things you just can't get right. But people, even something like Bigger Pockets, that's online, and people are like, oh, it's online. I can't get their W-9. I have a W-9 from Bigger Pockets. I have a W-9 from all of those online services, okay? Because they have an accounting department and they can give it to you. But not if someone is working for you, that's an employee. Well, let me say, if you're paying somebody to come in and clean your office or sort your files and their contract labor, then yeah, you'll have to have their W-9. We are incorporated. We are salaried as officers. Distributions. The question about your distributions. Yes, it's fine to take distributions. That's kind of a bigger question because we really have to see what your net income is at the end of every year and how much are you taking compared to that profit, whether you're taking too much or too little and paying it back. But you can certainly take distributions if there is profit in the company. Or those that have a paid ticket and those that have filled out.
Don't worry about that. That's a question to somebody else.
Okay. W-9s are for paying people, right? Not items. Yes. If you pay people or you pay companies for services. eBay, I think eBay reports all that. And because you're paying eBay and not the person directly, I think you're good there. Because unless you're paying that person directly, but if somehow in eBay you are paying them directly, then you probably need a W-9.
Do you need Allison asked a question. Do you need a 1099 for PayPal if the PayPal account is in the business name?
No, I believe PayPal and I believe those third-party entities take care of that report. Yep. Mm-hmm. So net profit from my LLC is reported on my person. Yes, so net profit from an LLC, the little bottom dollar rolls onto your personal return, and that's what you get taxed on. So you don't get taxed on all of the little transactions in between, right? Doesn't matter what the little transactions are in between. Whatever the end result is, Schedule C rolls onto your personal return. It shouldn't ever be related to your C Corp because there's an LLC and you have a C Corp, it sounds like. So those two things would never cross over. Your C Corp would have its own return. Okay, so this is just a picture of my old W-9 and my new W-9 because I started out as an LLC and now I'm an LLC taxed as an S Corp. So this is just what they look like. There's a lot of trouble out there filling these out. Please Google it and learn. And if someone gives it to you, is the main reason I'm showing you this. If they give it to you and it's not signed and dated, then you cannot accept it, because you want it signed and dated, because whatever information they're giving you, you want them to be responsible for that. If they've given it to you and it's wrong or it's false or a lie, then that falls on them and not you, because at least you have your form, right? But this box number 3, where this is marked, doesn't let me highlight it right there, but see where the little X is marked that says individual proprietor or single member LLC? That box number 3, that's what tells you if you're going to have to send that person a 1099 at the end of the year. Okay, as an LLC single member, yes, you would have to send me a 1099. But now I am taxed as an S corporation, LLC, taxed as an S corporation. My name is no longer on this W-9 because I have to file a return, and an S corporation does not get a 1099. Okay, so if you don't have this document at the end of the year, you wouldn't know whether to send me a 1099 anyway. Do you need a new one for each year? No. So see at the top right, it says revision was in 2018 on this form. The government, anytime they issue a new revision, then everyone is supposed to complete a new form. They had one in 14, one in 17, and one in 18, and they haven't had one since. So 18 is probably the most. But if your address changes, or like me, my entity type changed, so I sent one of these out to all of my clients, so they would have an updated W-9. But you do not have to do it every year, only if it changes, only if your information changes or if the form changes. With an LLC, if you're going to take a salary from your own LLC, do you fill out a W-9 for yourself? No, because you're an employee, and I'm going to guess maybe that you're using a service to pay yourself. I always suggest Gusto. There's several out there, but it's a kind of inexpensive payroll service. You can certainly do it yourself, but you have to withhold taxes. You have to pay those taxes out, state, government. You have to withhold unemployment. You're an employee, and employees do not get W-9s. As an employee, you have to fill out an I-9 and your W-2 form for your withholdings. Lots of forms. All right. How are we doing on time? 10 o'clock? Okay.
We're doing good. We're good. You got another, what is it, another 45, another 30 minutes roughly, 35 minutes.
Do you need to do a W-9 for a self-directed checkbook LLC? Self-directed, you mean like an IRA? Is that what we're talking about?
Yeah, that's what she's talking about.
Yes, I get lots of W-9s for people who are using their IRAs. Allison's like a W-4 for an employee. Yes. Oh, yes. You're going to get your W-2 at the end of the year, but you fill out the W-4. Okay. So now you're doing your books, and you have whatever entity it is, LLC, S Corp. Please don't do creative accounting. Just run your business legitimately. Okay. No speeding tickets on the way to your rental property. Those are not deductible. You just shouldn't be speeding. Meals and entertainment, that changed a few years ago. Really, there's no entertainment anymore. There's some exceptions in there, so you could do a little bit of reading about it. IRS.gov is actually a pretty easy site to read and understand. So go there. If you went to a ball game, like you're at some big event and you guys all go out for the evening and you're bowling and you're having meals, if you get separate tickets for the bowling and separate ticket for the meal is deductible. If it's all one meal, or one ticket, then it's not, because it's considered entertainment. Even on those meals, same thing. As you can tell, I have one very creative investor who does a lot of rentals, and he eats lunch when he's going from rental property A to rental property B, and he eats lunch. And so there's a $6 ticket from Arby's or McDonald's or whatever. So I can tell that that's a personal meal. It's not a business meal. So just because you're going from point A to point B, it's not a business meal. You have to eat anyway. And when you look at the IRS for meals, you will see that it says it has to be a restaurant. That's kind of a big one too. So sometimes if you're stopping at a Quick Trip or places that have pre-packaged meals, they're actually not even deductible. So check that out. And then remember that your gas in your car is also not deductible. You need to, unless you're doing really, you know, on your tax return, if you're doing the detailed deductions, possibly, but more than likely, you just need to be paying yourself mileage. Okay, because there's no way, if you fill up with gas and you're just going to one rental car, you don't use up the whole tank of gas. So you cannot directly correlate that tank of gas to a business expense. So you should be paying yourself mileage. But it's usually a better deal to take mileage anyway. It adds up pretty quick. Okay, so when you're coding, what other expenses? You know, what are legitimate business expenses? So what I have here is just a little print screen from the Schedule C. And this is not all inclusive because corporations can do some things that LLCs can't do, but this is just a general idea for you. Advertising, and just so you know, when I do the books and I set up the chart of accounts, I try to set it up so that it matches the Schedule C or similar, because not everything is included here. I try to line it up, right? So, and you should as well, so that when you give it to your CPA, they can drop your numbers into their tax software. So it's quick and easy for them, right? And that's how it should work. Your books and your tax return should match almost identical. Now there's going to be other things in your tax return, but so advertising, contract labor. So you see number 11 there. Contract labor is not the contractor who worked on your rental property. I am contract labor. If you pay me to help you with your bookkeeping, you have someone come in and do some filing in your office, those type of things. Contract labor people typically get a 1099, or you should focus on them to make sure you would send them a 1099 if needed, right? There's insurance on here. There's legal, office expenses. There's also office expenses and supplies. And so one thing you don't see on here is like postage, right? So where's my postage? I'm mailing things out all the time for my properties. Well, if you look at the instructions of each one of these numbers, office supplies includes postage and delivery. And so I set up the chart of accounts where office supplies and postage and delivery give your CPA one number. We track it separately in the books, but it's like a sub account. You get a total. So don't yell at me, Scott. You're going to see on here, there's no training and education, right? Because there is, if you are self-employed, there really is no deductible training and education. You're doing self-help training. So you're doing all these classes and all these things to learn so you can run your business. Now, I'm not saying that you can't take them as a deduction, because we do it all the time. We have other expenses here, and then there's going to be another sheet where all of your other expenses pop up. But there is travel on here, right? So for example, if you're paying for a registration to go to a seminar, I put all of those under travel, the registration fee, the air, the hotel, right? So it's travel versus training. If you go to a networking event and you eat a meal, but it's really a class, then that's just the cost of the meal. So it's under meals, even though it's training. But I've worked with a really great CPA. I don't know, Keith, it was the Keith Borg firm, and that's really where I got started. I was helping him because he didn't want to do bookkeeping anymore, and he only worked with investors. And I would see his books when people would pay a lot of money, right? Some of these programs are very pricey, and there'd be $5,000 or $10,000 or $20,000 on their books as an expense. And he would recode it as due from shareholder, which means you used company money for a personal item and you owed that money back to the company. Okay. So there's ways to kind of get around those things, but so I'm certainly not saying you don't do it, but I just want you to be very aware that just because you think something was for business, maybe it is or isn't in the IRS eyes. All right. Is it irs.gov/meals? I don't know, but I do know if you go to irs.gov, there's a search engine. It's a little search thing at the top. And if you put in meals, you'll see a nice little page. If your property are 3 hours away. So yes, there are, like, if you're certain miles, I think, and maybe it's even 50, if you're a certain number of miles away, then your meals count. But you still wouldn't do gas in your personal car. You would take mileage. Auto maintenance and auto repairs, can you pay for that? No. Your personal car is in your personal name, and that's why you take mileage, because mileage, like I said, it's a pretty good chunk of change, right? It's 50-some cents a mile, and that amount is created to cover all the wear and tear on your car plus the gas. So that mileage rate covers all of those things. And I do have people say, well, can I have a company car for my LLC? And then you deduct everything, maintenance, tires, everything. But that car needs to be in the LLC name. It needs to be in the company name. So you have to pay for the car out of the LLC. I think it's 50 miles. Well, not if you're at a local restaurant having a business meal or, networking. And someone was just asking about, what if I travel to a rental property that's, 200 miles away? Then yeah, you're going to have a meal because you're not at home. You're not able to eat at home, if that's what we're talking about there. How can one combine many LLCs into one or two without having to pay thousands of dollars? You can't. You cannot. There's no magic way to move one asset from one LLC to another. So it might not be as bad as you might think as far as the ramifications, but it would be worth having a general conversation with your CPA to see how it will affect you. But if you bought a property for $50,000 and then you put $50,000 in it in one LLC, and then you're going to have to deed it over typically at the appraisal price, maybe. Sometimes there's going to be a gain there. Sometimes there's not. Sometimes it'll just, the total value will be deeded over. So there's a lot of variables in that, but so if you're really going to keep all those assets, I'd probably just keep them where they're at. But if you really need to close that LLC, and if you're going to sell some things off, make sure you do all that first where they were purchased. So that's a pretty big question to think about. What if I lease a car to the LLC? I think that's creative accounting. Not that you may or may not be able to do that, but what percent is that car used truly used for your business. Bookkeeper or CPA under number 17 for legal and professional. Legal and professional on this number 17 is for CPA and attorneys only. So a bookkeeper is contract labor. CPA is legal and professional. But I do see a lot of people put under professional services, any kind of, professional that they work with. And so it's not true. Legal and professional is legal and CPA by definition. Can one LLC buy the other one out? Yes, you can sell your company and then everything gets zeroed out in your company. Probably a lot involved in that. Or not a lot involved in that, but something just to think through each step, right? All of your assets and all of your liabilities. Can we use one LLC as a holding corporation for other LLCs? If you mean like one LLC can certainly own another LLC, and people do that all the time. You have to have a separate set of books for those. And then your owner draw. So then that's where people start. That's where I said, like, they get too complicated and now they don't know how to move money around. So LLC number 1 owns LLC number 2. And you want to take money out of LLC number 2, and you take it right into your personal account. Well, you shouldn't do that because you're not the owner. So that LLC 2 should put money into LLC 1 because that's the owner, an owner draw. And then you would take money out of LLC 1. And so that's where people lose track of what their setup truly is and what the purpose is. Can you apply the old 65-35 rule for a personal card? I'm pretty old and I'm not quite sure what that is, but no, when in your tax return, you either are taking mileage or you're taking like the full deductions. However, like I said, think of it again. If you're an employee at a company and you use your personal card, that company is going to pay you mileage for whatever you did for the business. So you are a personal person doing errands for your LLC. And then with that mileage, your LLC should write you a check. I went 100 miles today, so they should write me a check for $50. Can also be done with a journal entry, but technically they should write you a check. Asking about contractors who are doing rehab work. Yeah, they are not contract labor. They are going to be repairs and maintenance or improvements for your property. Anything attached to your home, they would get coded to improvements. Or it might be repairs and maintenance. And you need their W-9. Okay, so profit and loss and balance sheet. Profit and loss, pretty easy for most people. Income at the top, expenses at the bottom. Now, sometimes we code the wrong things to income and the wrong things to expenses. For example, your payment on your mortgage is not an expense. Only the interest portion of it is. So income and expenses. And at the very bottom, we get the net income for your business, right? Here's what I'm actually making. And you cannot take an owner draw unless there's profit. Okay, an owner draw is not salary. An owner draw is on the balance sheet. It's not an expense to the company. It is equity in the company. You cannot take an owner draw unless there's profit. If you don't have a P&L, a true P&L, you don't know if there's really profit in your company. The balance sheet is the more complicated of the two reports, but you guys are very balance sheet heavy. You are all about assets. and sometimes liabilities, and certainly the equity that you're putting into your company or making. So you guys are very balance sheet heavy. And so I'll send a report to my client every month. I send in their P&L and their balance sheet, and they will mark up their P&L and send it back to me. And I never get their balance sheet. And I put questions on there, right? And it's just that thing. People just don't like it. They're intimidated by it. And so it's really important that you understand it. Okay, JV partner, we had a rental that was in her LLC. Does she 1099 me for half of the profit when she pays me, or what? So yes, if you do not own that property, you're a partner in it, right? So from her perspective, you are just a liability, and you're going to get your principal back, and you're going to get interest or profit, but really profit is interest. Interest income, investment income, they're all kind of treated the same from her perspective. She's going to give you a 1099-INT. Okay. There's a 1099 miscellaneous. Now there's a 1099 NEC, like not an employee. And then there's a 1099 INT. And those are the three most common that you guys might come across. But she would give you that 1099 INT to report anything she gave you back above the principal amount you invested. And I will tell you that when a property is sold and I go through books with someone, they have 98% of the time not reported numbers accurately on the gain, because they're doing it on a spreadsheet. That's a big one. So if someone's paying you, hopefully, hopefully they send you a report as well. But especially if you own it, sometimes, like, I don't know, things just get missed. Like, because when we do a closing HUD, we break out every line on that closing HUD in your books, and things just get missed along the line. But I will say that the person paying out the money typically pays too much. So I guess on that end, you're probably doing better because they have the human error on their side. And if they just miss an expense, they've thrown off the gain, right? And they've probably paid you a little too much money. So not bad on your side if you're receiving. Also, you end up with these JV agreements with partners in lots of different ways, and they all have different criteria. And your books have to line up with what that agreement is. And so I'll see that a lot too, where the books just don't match. Maybe you're supposed to be getting a 70-30 split or a 50-50 split, and it's just not happening in the books. If I lend a person or a company money, do they have to give me a 1099 when they pay me back in installments? Yes. If you're lending them money personally, like a personal loan, it's not, even if it's personal or your LLC, but there are a few differences, like private money, right? If I want to just invest under my social security number and give you money and we're going to do a flip. Yes, they do report that back to you. I'm kind of stumbling on that a little bit because when I first started out, when I read the instructions, it was like private money. You didn't have to report it. You didn't have to send a 1099. It was funny. I even had reached out to Keith Borg at the time. I'm like, is this really true? Because, we're sending 1099s to everyone at the time. And I sent him a little snapshot of the IRS site, and he's like, I guess it is true, which is kind of shocking. But now it must have changed along the line, because now as I look, it does say that, even individuals, if it's in the line of your business, you need to send that 1099-INT. So it'll be for the total amount they paid you, only the interest portion for the whole year. So it doesn't matter if it's installments, right, or one time, it's whatever they paid you in the year. So maybe you're getting like interest for hard money in this year, but you don't close until the next year. They still have to report what you got in the first year. And then the second year, I'll have more, like you'll get reported for whatever you made in that year. Okay. So just don't do creative accounting. What does your CPA do with your books? If I take less than the PB, illegal. So the UPB is not in your books. This is a big one for investors as well. If I pay $9,000 for a house, for a flip house, for a note, for anything, the value in my books is 9,000. It doesn't matter that it might sell for 30,000 or 40,000 or 50,000, because that's made up. It's a made up number, right? It's market value. And there's no guarantee that you're going to sell it for that amount. You might sell it for way less and lose money. You might sell it for a whole lot more and make a ton of money. So the UPB doesn't really get factored in. And I know that's kind of been a big issue, like I think with IRS and, can they tax you on that instant gain? But I'm pretty sure it just keeps getting squashed for that very reason. I mean, when the market's super high and the next year if the market's super low, it just doesn't make sense, right? Because your books are your assets. And when you pay for something, that is the value of your asset. You're going to worry about that difference when you sell it of either the big gain or the big loss.
I think what Ravel's also asking too, Debbie, is we as note investors, if we forgive folks on a balance, we're supposed to send them a 1099 for the difference, like on a short sale. Mm-hmm. So if they owe 120 grand, we take a short sale at 90, we're supposed to send them a 1099 for that $30,000 forgiveness is what we're supposed to be doing. I know it's a tricky question because we bought it at 9 grand and we accepted 90 grand. Obviously we would be reporting the $81,000 profit for us, but that we're supposed to be reporting that 1099 to the borrowers and the forgiveness. I know.
Mm-hmm. So let's say you bought it for 10,000 and it was worth 30, but so maybe they gave you 10,000 and you're writing off the last 10,000 in your mind. Is that what you're saying?
No, what we're saying is that they owe, let's use this, let's say they owe 50. We bought the note at 10. We allowed them to sell the property at 30. So there's $20,000 in balance that we forgave to accept a short sale. We are supposed to send them a 1099 for that forgiveness of debt.
Okay, so I don't think that hits your book. So I mean, I think you send that to them and that is something the borrower has to deal with. Yep. But on your books, you're recording the $30,000 that you received. Correct. And you bought it for 9 and you had some expenses. And so you're worried about your gain.
Yep, exactly. So you're not going to really put it on your books. It's just going to send them that for them to figure out.
That's for the borrower and for them to deal with on their side and their tax return. But your gain is based on what you get.
Right.
Yeah. Okay, so this is really important. So what does your CPA do with your books? CPAs are awesome. I am not a CPA. Obviously, when I'm doing the books, I'm trying to line things up to their software and I try to stay in tune with that. But I certainly have no desire and do not track tax codes and the changes every year. And that's why I'm not a CPA, because I like to play with money and numbers and I don't want to deal with tax codes. But first, you definitely need a CPA who is familiar with notes, because I get questions from CPAs sometimes on my clients' books and they're not even remotely close, right? So, and then they usually admit it, like, hey, this isn't something I normally do, blah, blah, blah. And so CPAs know way more than I know on any of that. But you need to understand your books. And when you give them to your CPA, they should be able to drop your numbers into that software when they send you, and then they're going to do a bunch of other wonderful things and take other advantages for you. And there's going to be other numbers on your tax return and it's going to come back to you. And everyone just signs it and files it. And you should not do that. You need to understand your tax return as well. And you need to look at your books, compare those numbers to your tax return, and figure out what is your CPA doing with those numbers. Because it's not your CPA's choice, right? He works for you or she works for you. And if they're going to manipulate your numbers, then you need to know what they're doing, and they need to explain to you why and what the benefit is, and you should agree to it. But I know that we don't. I just used a new CPA this year, and he worked his magic, and he sent me the returns to sign. I was like, okay, well, I need to see a draft of these documents. I'm not just signing whatever you've done, right? I want to know what you've done with my books, and I want to know if it's correct. And for my books, he was missing depreciation on my books. So just, they're a person too. They aren't in your day-to-day activity. They're not running your business day-to-day. So, work with your CPA, I guess, and just make sure you know what you're signing. I will also have a CPA. So if you have a JV partner, everything on your note pretty much goes on the balance sheet. So if you have servicing fees and insurance and all these kind of things, they are not expenses. They do not go on your profit and loss. So they're in a holding cost over here, and they add value to your asset because you have a JV partner and you guys are splitting things, right? And you're tracking those expenses. I will have CPAs take those expenses on your tax return as an expense because they want to help you out and they want to reduce your income. And they're like, oh, here's a bunch of things that are expensive. We can take them on your tax return. They cannot move those holding costs to an expense because you need to track those with your JV partner. It has to stay on the balance sheet. If you own the asset all by yourself, sure. It doesn't matter whether you take the expense now or you take it later with the gain or the loss. That's okay. But when there's a JV partner involved, they can't do that. And so you need to understand that. And you would, because you're going to be coding it. And then we have to make sure that your CPA doesn't change things around as well. Because now your books don't match either. Because now you get audited and you had all these expenses and you're like, I don't have any of those expenses in my books. Right? So you really need to work together. But really the point of this is you just really need to understand your books so you can then understand your tax return as well. Okay. Slide number 10, which means there's only one more. Quiz. Important quiz. When do you need a bookkeeper? When you open your business checking account, when you paid for your first class to learn how to invest, when you buy your first asset, when you open your LLC, or when you have 5 or more assets. Let's see some A, B, C, D's, and E's. Two brave souls.
A, E, I, O, U.
Okay, so a lot of these things are happening at the same time, right? You're opening your LLC and you're opening your bank account and doing those things. But what's most important is when you open your LLC. You just started a business. So now I need a set of books to go with it, okay? You're also opening that business checking account, buying assets, maybe. Sometimes you even buy the asset before you set up the account, okay? So bookkeeping is because you own an entity. Now, you might have also had some expenses before that, right? You had to pay out of your personal fund $300 to open your LLC, and maybe you did take a class, and you might have some things. You had to put $100 in your checking account to open it, and we can add those things into your books with journal entries to capture those first few expenses, and you want to do that. But you need a bookkeeper, or I should say bookkeeping, when you open your LLC. Do you need a bookkeeper? I guess I should put bookkeeping in that. I'm gonna change that slide. So you don't have to work with a bookkeeper. You can certainly do it yourself. And the reason you usually work with a bookkeeper is you hate doing it or you don't have time. And so that's kind of when you probably want to have a bookkeeper do it. But you can do your own books forever. And like I said, I really like to help people. And so I do sessions with people. Sometimes we review their books every 6 months, every 3 months, once a year. We go in and we look at the profit and loss and we look at the balance sheet. We fix things. The nice thing about QuickBooks is once you kind of have something in there as an example, then you can refer back to it. So when we tackle certain things, you have a good example in there. Some people, I even do it with them when they first open their LLC and we hardly have any data. And so we just put sample transactions in there of things that might happen along the way. And we just date them out like, for 2030. So that if they're running books for 2022, those things don't show up because we just date them too far out. So you can certainly DIY your own books. Okay. I usually always do one-on-one, but just, I am getting ready to do like a group set of series of classes as well. And this is my website. The information is there. You can it's 3 separate sessions. The first one is the basics, setting up the chart of accounts, getting everything going. The second one is a little more involved in coding. And then the third one is like all those advanced transactions, because everything you guys do or something weird happens in every one. So we tackle all of those what ifs and what if this happens. So I'll put that PDF up in just a second as well. I always promote my kitties. Our big thing is that we are trying to create homes for little cats and dogs that don't have them. So if you're animal lovers, definitely connect with me. How do you find a great bookkeeper? Oh, you. Thank you, Shelley. Yeah, I mean, if you want someone that you can run down the street and talk to in person, then local. I have clients from Washington State to California, Virginia, Florida. Like I have them all across the country, right? And most of them are investors. I do have a few other clients.
One of the great things is once you've got the chart of accounts set up, it's pretty easy to log in and check a lot of things, and then it's a matter of just asking some questions, on a regular basis. Where does this fall into, right, Debbie? In a lot of cases with your existing clients.
Yeah, exactly. And there's a little place in QuickBooks called Ask My Accountant, and so I just tell people like you just do what you can, get it all in there. If you don't know where to code it, just put under Ask My Accountant. And so that's usually the first thing we do in a session is we go through those. We get them coded. Sometimes it's breaking things out. I sold an asset. I don't know how to close out this asset. So we just go through those things. And like I said, then you end up with a really good example of how to do it each time. Although, like I said, you guys have very creative closings, right? Some of them are very different, but you'll have a similar, it's a similar transaction and you just learn a little bit more each time. And then I have people who, we just do it once a year. And we, like I said, before they do their tax return, we go through everything and clean everything up and make sure it's, that it's in the right. I will, for those who you might, obviously I can't do the books for 1,000 people unless I really start hiring a bunch of staff. So if you do go to use a local, so I'm saying this not because I'm trying to get you to come to me, but if you use a local bookkeeper, just really make sure that they know what they're doing, because I've certainly taken over many sets of books that are horrible. Your books should not be full of journal entries. This is huge. Your books should not be full of journal entries, because a journal entry is someone just putting it in there and making it match. It should be every check, which is wire, whatever, every outgoing payment is one line, every deposit is one line, and they all get broken out. It reconciles, which means it matches your bank accounts, and it has to match your bank account. And I'll sit down with the client and they're like, okay, I've got everything entered, everything's reconciled. first thing we look at on the balance sheet are the bank accounts. And I'm like, okay, well, here's the balance as of December 31st. Can you show me your statement? And I look at the December statement and the balance does not match. So something's missing, right? That's where you start. Everything's got to be in there. Doesn't matter whether it's coded. We can fix the coding anytime. But if it's not in there, if it happened in your bank account or your credit card, it has to be in your books. So you reconcile. The nice thing about accounting is there's checks and balances for everything. And it helps, helps you make sure that you've got it all in there. If you don't have QuickBooks, what would you recommend to track information? You have to have some kind of formal bookkeeping software. I think there's some free ones out there. What I understand is they don't have the class field, and you guys have to have the class field. And all that means is that every transaction gets tagged to an exact property, or maybe to the company because it's overhead, it's your telephone expense or something. Every transaction has to be tagged to a property because you have to be able to run a report that's like the profit and loss by class, which means by property, because your CPA needs to see that. He needs to see it broken down by each asset. So whatever software package you want to try to use, you have to be able to categorize those transactions. So that's one key thing. Do your courses cover owner finance transactions? Yes, absolutely. Owner financing it's very common. It's just a different type of asset for you. You're getting principal and you're getting interest income. And we just break all that out and track it. How much should a good bookkeeper run? Well, that check I had was $1 million to me, so I'm pretty good with that.
That's right.
I charge, if I can do like a half day a month, go in, get all your books downloaded, imported. And that's what I do for my clients. When the month is closed, I go in, I get everything imported from the bank. I have a login for the bank account, so I can go in, download everything myself. They don't have to do anything. Credit cards, I get everything in there. I get it all done. And I send them a report asking any questions that I might have. If I can get all that done in like a half a day, which is an average LLC, not a huge one, but that's $3,600 a year, which is $300 a month. I will be honest, I'll tell people all the time it's a half day, and it always takes me 5 or 6 hours because, I'm detached and I have to try to figure things out. So it always takes longer than I think it will. But $300 a month is pretty average, I think, out there. So that's something to think about, but it could certainly vary. There's certainly some that are much less because I've seen it in somebody's books when I take it over. But I'll tell you, it was a mess. And that's just for one LLC. It depends. If you have 2 LLCs and each one has 1 rental property in it, I can probably do both of those in still a half day, right? So it's really a matter of time versus I bill my clients based on how much time am I going to spend each month. So that's where it comes in. Because you could have one LLC that takes me 8 hours because there's, you have people who buy notes and they buy 100 notes at a time.
Mm-hmm.
So.
Yeah, us pool buyers.
Yeah. But just so you know, 100 non-performing notes, it's much easier to do bookkeeping than on 25 performing notes. Because you've got a lot of activity on performing notes. You have not much except servicing fees or something going on, right? So I will put that's all.
Perfect.
I've split it up over 3 classes, and you can just do 1 class. So if you just want to do the beginning one and get everything set up, you can do just that, or you can jump in for any of the sessions. I have them for Wednesdays and Saturdays because I know a lot of people work. So we can do that. And then I'll send this to Scott, this PDF, or I can email it to you. This is just a description of what we're going to do in each session. And we're going to do like a couple of hours, and then we'll have like a question and answer at the end. So you can leave after 2 hours if you want to just get the meat of it, or if you want to stay for questions. I'm small potatoes right now. But it's okay to do your own books. And I will tell you, I'm a big QuickBooks desktop person. I am not a QuickBooks online person. I mean, I can help people with it. It's two very different products, and the online version is designed to do stuff for you because they wanted just anybody, right? You didn't have to have any bookkeeping knowledge. They want anybody to be able to use it. That was their goal. But books they're just usually a mess when I go in there, right? It's just not as easy to use. It's kind of cumbersome, but not that it's not great. And people perfect it. Absolutely. It's just not my preference. It's also very slow for me. It takes 10 clicks to do what I can do in 3 clicks in my desktop version. I'm not a very patient person, so I prefer that. But I will say the desktop now, they are making you buy an annual subscription. Like they wanted everyone to do online, so they get that monthly payment. And so desktop now has you could buy desktop and use it for 5 years, pay $300 and use it forever until it just crashed on you. And they wanted to get away from that. So they do kind of have an annual subscription now, even though it's a desktop version.
Yeah.
That's what I use.
Cool. Awesome stuff, Debbie. This has been really, really good. I'm getting a lot of messages from people here that this was very valuable. You've got some folks online definitely have asked some great questions that you've answered in here. I want to thank Mike for commenting on there and a few others on the live stream as well. So this has been really good.
Yeah, thank you guys so much. It's always fun, and I love it. It's black and white. 2 + 2 is always 4. 2 + 2 is never 5. And so, I'm not an artsy person or a creative person, so I'm very black and white.
Well, that's good when it comes to bookkeeping. When you get in the gray is when you get in trouble a little bit.
Exactly. No gray. There's no gray. So yeah, well, I really appreciate you guys letting me join you.
Yep. The link again, let's see here. I've typed it in the chat roll. You can take a look at it. Like I said, you can sign up them individually or get them all 3 at a discount there for you. So let's see. I put those in here. There you go. Yep. dmbookkeeping.net/workshops. And I'll put it back in the chat roll one more time down there for everybody in case you missed it. And I'll put for everyone here. And we'll be good to go. Awesome stuff, Debbie. Thank you so much for coming on Note Camp. This has just been valuable. Just great stuff. I mean, we go a long time, but your guys are getting into more specific questions. Hey, book a call, jump on there, reach out to Debbie, sign up for a class for her. She knows what she's talking about. As you guys will know that and seen it from the last hour, 15 minutes therefore. She knows what she's talking about.
Yeah, awesome. Well, you guys enjoy the rest of your camp.
Yes, ma'am. Thank you so much, Debbie. Have a great rest of your Friday, okay? We'll talk to you later.
You guys too. Bye.
Bye. All right, everybody. Hey, we're going to take a short little break. We got about 7.5 minutes till our next speaker comes on, Bryce Robertson, talk about mobile home parks and how that's working. And now's the time for you to get up, fresh cup of coffee, get a little energy, do your power pose, and we'll see you back here in just a few minutes. Make sure if you have not filled out the Note Camp survey, you do so by going to notecampsurvey.com and get that all taken care of today.